Hello, South Bay homeowners. You know, your home isn't just bricks and mortar, is it? It's a huge part of your financial picture. Holds a lot of wealth, often wealth you're not really using.
That's right, untapped potential.
Exactly. So today we're doing a deep dive into something called a jumbo reverse mortgage. It sounds complex, maybe a bit intimidating.
It can seem that way.
Our mission here is really to cut through the noise for you, especially if you're in places like Palos Verdes Estates, Manhattan Beach, Torrance. We want to show you how you might be able to tap into your home's value without selling it.
Yeah, let's get into it.
Okay, let's unpack this. So first off, just a basic reverse mortgage. What is it at its core?
Right. So fundamentally, it's for homeowners, 62 or older. It lets you take some of your home equity, the value you've built up, and turn it into cash.
Okay, cash you can use.
Cash you can use. And the key things, you don't sell your home, you don't make monthly mortgage payments, and crucially, you keep the title, you still own your home.
And there's that term, non-recourse. What's that about?
Yes, very important. Non-recourse means that no matter what happens with the housing market, you or your kids, your heirs, will never owe more than the home is worth when it's eventually sold.
Okay, that's a big safety net.
It absolutely is. Now, what's fascinating, especially for this area, the South Bay, is the jumbo part.
Right, the jumbo.
See, the standard reverse mortgages, the FHA ones, they have a limit. For 2025, it's $1,209,750. That's the maximum home value they'll lend against, basically.
Okay, just over 1.2 million.
Exactly. But jumbo reverse mortgages, they're different. They're private loans, not government insured, and they're designed for homes valued higher than that FHA limit.
Ah, so that's where it connects to the South Bay.
Precisely. Think about median prices. Manhattan Beach, what, $3.3 million? Palos Verdes Estates, $2.6 million. These homes are way above that standard FHA cap.
Way above.
So for homeowners here, a jumbo is often the only way a reverse mortgage really makes sense to access significant equity.
Got it. But, you know, these things, they come with baggage, right? Lots of myths floating around.
Oh, definitely. So many misunderstandings.
Okay, here's where it gets really interesting. Let's tackle the big one first.
Yeah.
That fear. The bank takes your home. How much truth is there to that?
Zero. It's simply not true. It's probably the biggest myth. You keep the title. You own the home.
Okay.
The lender just places a lien on the property, just like with a regular, forward mortgage. It's collateral.
So ownership isn't changing hands?
Not at all. Then there's the other one. It's only for desperate people.
Right, like a last resort.
Yeah, and that's really outdated thinking. Increasingly, we're seeing affluent seniors use it strategically. It's becoming a sophisticated financial planning tool.
How so? Strategically?
Well, think about it. Diversifying assets, creating liquidity, maybe, to avoid selling stocks when the market's down. Enhancing retirement income without touching other investments. It offers flexibility.
Less about desperation, more about options.
Exactly. Options and control. And what about the heirs? That's another big concern, isn't it? My kids lose their inheritance.
Yeah, what happens there?
Well, again, it's a misunderstanding. The heirs inherit the home along with the loan balance. They have choices.
Okay.
They can pay off the reverse mortgage balance, maybe refinance it and keep the home, or they can sell the home. If they sell it, the loan gets paid off from the proceeds and they keep whatever equity is left over.
And that non-recourse thing protects them too, right?
Absolutely. If home values have dropped and the sale doesn't cover the full loan balance, they aren't on the hook for the difference. The lender absorbs that loss. They inherit the remaining equity, if any, not the debt beyond the home's value.
Okay, that clears up a lot. So we've busted some myths. Let's talk benefits. Practically, for someone in, say, Torrance or Manhattan Beach, what does this do for them?
Well, the biggest one is probably financial flexibility. You can get the money as a lump sum or set up a line of credit you can draw on as needed. That line of credit can even grow over time. Or you can get regular monthly payments.
And no required monthly mortgage payments.
Correct. That's huge for cash flow. As long as you live in the home and meet the loan terms, which we should talk about, no monthly principal and interest payments.
Okay, and the money itself, tax implications.
Generally, the money you receive isn't considered income, it's loan proceeds. So it's typically tax-free. Of course, always consult a tax advisor, but that's the general rule.
Tax-free cash flow boost. I can see the appeal.
Definitely. Think about what that unlocks. Maintaining your lifestyle, maybe travel, home upgrades you've been putting off, or eliminating your existing mortgage payment. Imagine freeing up that much cash each month.
Yeah, that could be substantial.
Or covering healthcare costs, maybe funding in-home care so you can stay in your home longer. Even strategic things like helping family, maybe a living inheritance, or funding a trust.
So it connects back to enjoying life right here in the South Bay.
Absolutely. It's about having the resources to, hike those coastal trails, enjoy the local art scene, stay active at the senior centers without that constant financial pressure or having to downsize.
Okay, sounds powerful.
Yeah.
But what are the catches? The responsibilities?
Right. It's not free money. You are still the homeowner. So you absolutely have to keep paying your property taxes and your homeowner's insurance.
Standard stuff.
Standard stuff, but critical. And you need to maintain the home, keep it in good repair. If you don't meet these obligations, the loan could become due.
And interest. It doesn't just disappear, right?
No, the interest on the loan balance accrues over time. It gets added to the loan balance, which means your home equity decreases over the life of the loan. That's important to understand.
So you're using up equity.
You are using equity. That's the trade-off for receiving the cash and having no monthly payments. Also, there's mandatory counseling.
Counseling.
Yes, before you can even apply, you have to talk with an independent HUD-approved counselor. They make sure you understand exactly how it works, the costs, the implications. It's a consumer protection measure.
Good to know. Anything else folks should consider?
Definitely choose a reputable lender, someone experienced with jumbos, and honestly, talk it over with your family. Open communication is really key for these kinds of decisions.
Makes sense. So wrapping up, it sounds like your South Bay home is this really dynamic asset.
It truly is.
And a jumbo reverse mortgage is not just about money, is it? It seems like it's about empowering you to live retirement on your terms, right there in the home you love.
That's the goal, providing options and control.
So the thought to leave you with: just imagine the possibilities for your retirement, secured by the home you've built your life in, but now having it work for you in a new way.
It's worth exploring.
Definitely. We really encourage you, if this sounds potentially interesting, talk to a trusted financial advisor. Talk to your family. See if it might be the right fit for your specific situation.